Class A shares give investors the opportunity to generate higher returns and higher cash distributions compared to a direct investment in those same stocks. Over the long run, shares of these funds have outperformed their benchmarks. My name is Michelle Tiraborelli. I'm the head of split shares at Brompton Funds.
My name is Cullen. I'm head of ETFs for Brompton Funds. Split share funds are a uniquely Canadian category of investment fund. Brompton Funds manages a number of split share corps.
Split corps are investment funds that typically invest in dividend-paying stocks. Investors can use split share funds to invest in diversified portfolios of high-quality dividend stocks or specific sectors like financials, energy, or infrastructure.
The reason we call them split shares is because we're taking the characteristics of the common shares that these funds invest in, which are the dividends and the capital growth, and we're splitting those characteristics between two classes of shares issued by the investment fund. The preferred share gets the dividends, and the common shares, or the Class A shares that are issued by the investment funds, get all of the capital appreciation.
Class A shares are designed for growth and high monthly cash flow, while preferred shares are designed for capital preservation and steady dividends. Because of the split share structure, Class A shares offer enhanced exposure to the fund's portfolio. This means that if the stocks in the split share fund's portfolio increase in value, the value of the Class A shares will increase in a more magnified way, and vice versa. Class A shares give investors the opportunity to generate higher returns and higher cash distributions compared to a direct investment in those same stocks. Over the long run, shares of these funds have outperformed their benchmarks.
Class A shares may be suitable for investors who are comfortable with equity investment risk and who are seeking enhanced levels of capital appreciation.
Investors who have a positive view on the market or a particular sector, or who are just looking for a long-term investment for growth and income, may find Class A shares to be an attractive option.
Investors who would like to get exposure to Class A shares can do it in a couple of ways. The more traditional way has been to focus on individual Class A shares, which trade on Canadian stock exchanges every day, and they are available for purchase. Investors who do decide to purchase Class A shares directly should be comfortable with the sectors that the funds invest in, and they should also do their homework to familiarize themselves with the unique features that each Class A share offers. Not all Class A shares are alike.
Another option is for investors to purchase an exchange-traded fund that invests in Class A shares of split share funds. Brompton Split Corp Class A Share ETF invests in a diversified portfolio of Split Corp Class A shares, not just Brompton split shares, but Class A shares from across the Canadian split share market. Investing in an exchange-traded fund to get exposure to Split Corp Class A shares gives investors an opportunity to access a diversified portfolio of Class A shares and get additional trading liquidity through the ETF structure, and also benefit from professional active management from Brompton Funds investment management team. This ETF also pays regular monthly cash distributions at an attractive level, providing investors with long-term growth opportunities and attractive cash flow.
Another benefit of CLSA, our new Class A share ETF, is the distribution experience that we're looking to provide for investors. Individual Class A shares pay high levels of distributions. However, those distributions are conditional upon the NAV reaching a certain threshold, after which the distribution may be shut off to protect the net asset value for a certain period of time. CLSA plans to offer a smoothed distribution experience to investors. Our initial distribution level was 12% of the listing value, and we plan to revisit and reset the distribution from time to time to approximately that level. There are a number of high-yield equity ETFs available on the market today. Many of those investors could find benefit from looking at CLSA as a portion of their high-yield equity investment. Number one, the structural leverage that Class A shares provide to investors has proven to outperform the general equity market over long periods of time. And the distribution management policy of Class A shares has protected the NAV for investors for a long period of time as well. So for those two reasons, we recommend high yield equity investors look at CLSA for part of their investment.
Visit bromptongroup.com/CLSA for more information.